Sure. Welcome, guys. Elia Ubot. We're back again. Today I'm touching on something very interesting, something that has been making rounds since yesterday, which is the increment in the repo rate by 50 basis. So, yes, that's where I'm going to touch on today. So, I'm going to touch on what the effects of this repo rate increment is on if you have a bond or you have a car financing loan, if you have existing investments, or if you are just an ordinary citizen with no investments or with no bonds, or if you are maybe looking into getting into a loan to finance a car or a bond to finance your house. So I'm going to talk to all of that. So yes, I'm gonna get right into the introduction of the backstory of repo rate, how it came about, and so forth before I get into the effects. So sure, let's dive right into it. So I think beginning of the week, the Monetary Policy Committee at Bank of Namibia sat down and they actually had to vote on by how many basis points are they going to increase the repo rate. Now, basis points, guys, is basically just a way to read commas. Or is it not commas, but yeah, is it commas? Not commas, but decimal numbers. So points just actually means comma something. So if we say 50 basis points, it means 0.50. If we say 75 basis points, it's 0.75 points. So yeah, so that's what happened. They increased the rate by 0.50, so which actually pushed the repo rate to 6.5 as we speak currently. And in that breath, the repo rate actually as well pushed the prime rate, which is the prime rate is the rate at which individuals get charged interest by commercial banks, and then the prime rate is the rate which the central bank, the Bank of Namibia, charges the commercial banks when they borrow money from the central banks. I hope you're following me and you get what I'm saying. Sure. Yes. So that meeting on Monday, they voted that the majority voted that the rate was going to be increased by 75 point basis, and yeah, came Wednesday, the majority flipped, and all the directors or the committee members voted for 0.50 basis point. So and just to elaborate on why the increment was done, the increment was basically done to maintain and safeguard the one-on-one link between the Namibian dollars and the South African rand. We have that one-on-one exchange rate. Yes, so guys, that's the background about this whole repo rate thing, how it came about to be increased. So I'm just gonna dive into the effects now that this repo rate increment has on, let's say, if you have an existing loan for your car or an existing bond, or if you are a company and you part of your investments are financed by debt. So I'm sure most of you know the increase in repo rate means increase in interest rate. So definitely you're going to pay more for your interest on these debts. And if you have an existing investments, wow, good for you. If you have investments like in savings account or unit trust investment, then you should expect at least an increment in your interest income. Yes, good for you. So guys, you must start investing. Just have those savings accounts and all that. And then if you're an ordinary citizen and then you do not have any loan and you're thinking like, how is this going to affect me? I think I'm sharp. It's not gonna affect me. So you would definitely be affected indirectly, which is by the goods and services that you consume on a daily basis. like I said, if a company has some of its investments financed by debt, it means they are going to pay more on their interest. So they would also want to cover their interest. So how are they going to cover their interest? Increase their prices on the services and the goods that they supply. So ordinary citizens are going to take the punch on the goods and services that we consume. And if you probably want to get into a loan agreement, let's say maybe this month or next month, ish man, it's so bad. It's going to be bad if you do not have a deposit because the interests are now high. So I will advise you to at least save up at least 20 to 30% of your loan that you want to take out. Then you can get negotiating power to at least lower this higher interest rate. So you must play smart with us. So if you're going to get a bonus this December and you probably want to buy a car next year, maybe you might want to take that small money and put it aside. That maybe half of your bonus, put it aside as part of your deposit, and carry on saving up for deposits, like I said, so you can get some negotiating power for your interest rate. Because when you don't have any deposit, hey man, as you can see right now, the prime rate I think is standing at 10.5%. And if you don't have any deposit, let's say for a car loan, it means they probably even gonna ask you 11 or 12% on the interest. Can you see how bad that is? But if you have like a maybe 30% deposit or 35% deposit, you can be able to negotiate that even as low as 10%. So yes, think smart. This December, your your bonus again, service your existing debts, or if you are anticipating to get into a debt loan, put that money aside for your deposits. I'm not going to dictate what you do with your money. I'm just going to show you, I'm just telling you what is the right way to deal with your monies. So the ball is in your court. So basically, that's what I wanted to touch on. I hope you found this informative. Yes, you should have a good weekend coming and happy December. Cheers, guys. Elia.